Yo, 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 what's up? Hey guys, this is me, Kadero Hudson. I am here to talk to you about something interesting, something new, something that I just ran into. It's this stock called, it's a leverage ETN. It's called FANGU, FANGU. We're going to talk about what FANGU is, why I'm talking to you about this today, the different type of stocks that contains in this ETN. If is FANGU the right particular ETF ish to buy over TQQQ or regular just QQQ? Do you even know what QQQ is? For new investors, experienced investors, intermediate investors like myself, we're going to talk about it. We're going to dive in to figure out what this FANGU consists of and what's the hype. But before we start, make sure you like and subscribe to my channel. Remember that anything that we talk about today is not professional advice at all. But if you want professional advice, you can always look at financial advisors and wealth advisors and financial planners, and they'd be more than willing to answer your questions. Remember, my videos is for educational purpose only. We're here to learn, to grow, to make money on the internet, make money in the stock market. That is always going to be forever my goal to make money in the stock market, to always clear up my personal finances, and to always stay on my financial management. And as I do that, I'm able to speak to you guys about through whether it's through my investments, through credit cards, buying a house, etc. So financial management is actually is wealth because you what you don't know hurts, but once you find out the knowledge of how to make money and how to pay yourself first, you can't forget it. And so just remember that there's financial institutions like Jupiter Wealth Management. You have J.P. Morgan Chase. You have Wells Fargo Private Management Advisors and Merrill Lynch Asset Managers that you can lean on that have actual industry experience to be able to help you in your walk of life to invest. Or guess what? You got individuals like me that talk about it with you guys, and then you can do your personal research and then figure out to see if these stocks or ETFs are in your realm of possibility that interests you, right? So what is FANGU? FANGU is the MicroSectors FANG 3 times leverage ETN. So usually when I'm investing, I'm investing to via VTI, VU, and I'll personally invest in the QQQ for the Nasdaq to get that tech exposure. For me, I typically don't invest into leverage ETNs, but this leverage ETN uh, that I'm bringing to you guys is unique. It's unique because over the past 5 years is the rate of the returns has been more than TQQQ, which is the pro shares ultra pro ETF. We'll go over that. It's also a leverage ETF. So the leverage ETF, how I explain it is that when you look at stocks and you look at the beta of stocks and how it fluctuates up and down. So what one is with the market, over one is if something fluctuates a lot. Under 1.0, that means that it's stock or ETF, whatever, if it fluctuates less. So when the market goes down, if it's close to one, that means that if the market goes down, it's going to go down similar to the market. If you have a stock or ETF that's under has a beta under one, then if the market goes down, it's not going to go down significantly. Anything above one means that if the market goes down, the Nasdaq indice or SP 500 or Dow goes down 1%, then anything above the one in beta, you're gonna your portfolio and whatever that is, that stock ETF is gonna go down to the 1.5. So it just all depends. So when you're in a bull market, yes, you're making a lot of money because leverage. But when it's in a bad market, sucks. But then Think about it. When it's in a bad market, why would you put all your money into whatever something like that risky at once anyway? Why not dollar cost average and along the way put $50 every 2 weeks or $100 a month? Because then rather if the market goes up and down, you still buying it at certain points, and so you just dollar cost average. So FANGU, FANGU, the microsectors FANG 3 times leveraged ETN is seeks return linked to 3 times the leverage participation in daily performance of the NYSE FANG index or total return of the index. And so the stocks that top 10 holdings of FANGU is uh, Meta, Facebook, Tesla, Nvidia, AMD, Netflix, Apple, Amazon, AMZN, Snowflake, which is interesting, Microsoft, MSFT, and then Google. For have Snowflake in the top 10 is risky because all these other companies are major billion-dollar companies. And Snowflake, I would consider Snowflake more of a small cap type of stock. So that's interesting. That's a lot of risk. Uh, and then right here, it costs $95.35. And then in the next screen, with the FANGU, which is FNGU, the microsectors FANG index 3 times leverage, as you show right here, for the last 5 years, it's been in the positive. And the reason why it has a average return was 73%. But then the reason why it's I'm pretty sure the reason why it's less than for a 5 year. The reason why it's a little bit less is because I'm pretty sure right here all this captured all the growth from 2018 to about 2021. But recently, in the last 2 years, 2022, and then as you count it, we almost half of 2023. We've been in a bear market, and this bear market you see, we're down. So from all the way up here, we're down. But even with that, the past 5 years, still up 73% if you would have bought this 5 years ago, compared to TQQQ. TQQQ is the ProShares Ultra Pro ETF, and the TQQQ invests in public equity markets of global regions and invests in derivatives and stocks of companies operating across the different sectors. Uh, and TQQ costs $27.47. And so know you're wondering like, hey, Kader, you've been talking about FANGU, and you figure out if FANGU is the ETF to buy right now for large growth. Why are you bringing up TQQ? Because I have an article to explain uh, the differences between whether you should buy FANGU, FNGU, or TQQQ. But for me, I don't need all that extra risk because typically what people tend to do they buy a total stock market like a VTI or SP 500 ETF like VU, and then you normally have satellite stocks or ETFs around it to increase the risk. So if you had like a VTI and then had satellites of maybe Tesla, Apple, and maybe FANGU, a person that's sensible wouldn't just have just all of their eggs in one basket of FANGU or TQQQ or just all their baskets in just strictly QQQ because you know that high risk is high reward. High risk makes more money, but at the same time, if you have all of your money in these high risk investments in times like this right now, where you need to probably dip into it, sell or something to create profit because you need to, you know, pay money for high eggs or a house or whatnot, the market has been down for the past 2 years. So what stability would you have had to fall back on if you just invested solely in TQQQ, QQQ, or FANGU, right? Right here, it shows the comparison between ProShares Ultra Pro, TQQQ, and MicroSectors FANG Index 3 times leverage ETN FANGU or FNGU. And so here to give you So the year to date, wow. Oh, it says right here, the year to date, compared to TQQQ compared to FANGU, the year to date return almost close to 60%, but for FANGU, 118%. If you know the rule of 72, divide whatever the rate of interest by 72, that's how long your initial investment will double. And so right here, the year to date, if you invested like let's say $10,000, your $10,000 will have doubled year to date. But it says 1 year return. It's in a negative because, of course, we've been in a bear market. So, of course, uh, and so right here, this chart right here, it says in a year-to-date period, TQQ achieves a 59.88 return, which is significantly lower than FANGU's 118.55 return. So over the past 10 years, TQQ has outperformed FANGU with an analyzed return of 37.43%, while FANGU has yielded a comparatively lower 11.51 annualized return. The chart below displays a growth of 10,000 in both assets with all prices adjusted for splits and dividends. So TQQQ is the blue, the FANGU is the orange, and it said basically year to date, FANGU it looks like blowing it out the water by times two. But over the past 10 years, TQQQ has outperformed FANGU. So what you do is why not invest to both? So why not put like $2,000 into TQQQ and to put another $2,000 in FANGU and you win? Because right here it shows that in the past 10 years, yeah, it shows basically that in the past 10 years that TQQQ has beat it, but like it looks like over the past like the last 3 years or whatnot, FANGU, the microsectors index 3 times leverage has been overperforming. So I would say why not leverage both? And if you had one to buy, then maybe uh, TQQQ may be the way to go. But I would say in the long run, if and like I said again, these are not financial tools that you utilize to invest all your money into all at once, or that's the only thing you're investing. Usually, you invest into this as something to add to your portfolio to uh, increase your risk tolerance. So you increase it. So it's high risk. So like Bitcoin, like crypto, like so investing to TQQQ or FANGU is like the type of mindset of investing to crypto that you're gonna have your own regular portfolio of stocks, ETFs, mainly hopefully index funds and ETFs that you're gonna pay per month to grow, have a nest egg, and then you have regular stocks slash right here leverage ETFs that you taking a chance. It's like taking a swing at the ball to hit the ball over the whole run. TQQQ and FNGU FANGU are the risky plays that you probably put maybe $100 per month to increase it to maybe 5,000, so that down the line maybe 10 years, 15 years, by adding a little bit that see right here, as you see in a couple months, like rather than couple months, it grew to 118%. So taking that, you're not investing everything all at once, but you nibbling so that if down the line, if it grows big, great, you can sell it for a profit. But if it doesn't grow, or if it fizzles out, then you've only invested a small piece of your overall wealth portfolio. This is financial planning right here. So this you only invested only a small piece of your whole portfolio. You have maybe 10% in crypto and maybe another type 10% in these risky assets that you taking a swing, or individual stocks like Apple and Tesla. They're high risk because you only invest into one of those stocks or one of those commodities, one of those things, and it can easily go under, like AT&T, where they suspend their dividend due to debt or due to a bad acquisition, like with Ultra Group with Jewel, etc. Always diversify your portfolio with real estate, REITs, stocks, ETFs, index funds, so that you're investing across a basket of many hundreds of stocks, and then take a swing at these riskier assets like Bitcoin, TQQQ, and FANGU, so that one, you can easily grow your money super fast. And then also, once we take a sniff, a whiff of the bull run, because we are in a recession, so we're in a bear market. But once we go the trajectory into a bull run, then guess what? Then you really can start making money, and while the market is down, it's the perfect time to buy these riskier assets. But again, remember, only put a small percentage of your overall portfolio. Use these percentages. Use it while the market is down to buy into these riskier assets, so that in 5 to 10 years that you're banking that it's not going to be $94. You're banking that it's going to be $250, $300 per share. And guess what? You have bought in, and that would have been a small piece of your investment that have grown to maybe 25, 30, hopefully one day 100,000, right? And you can use that for whatever you please. So all in all, is the MicroSectors FANGU a good ETN to buy? I would say FANGU and TQQQ are great instruments to buy, not solo, but to add it to your particular portfolios, to diversify, to add more risk, especially if you are in your 20s and in your 30s. I would say if you're in your 40s and 50s, FANGU may not be the particular investing in instruments to buy. Because it's very risky, and as you get older, you want to mitigate your risk and more capital preservation with growth, but more capital preservation. But if you are in your 20s, in your 30s, I would say, if you do like FANGU, FNGU, then invest into it, piece by piece, dollar cost average, $25, $50 a month into it. Watch you see it, that your portfolio grow from $2,000 to maybe $5,000 to $10,000, and you probably have a small piece of the pie of maybe $2,000, $5,000 into this, but your overall portfolio maybe 30,000. And guess what? If the market goes down and tank like it does now, you still have a $30,000 to $40,000 portfolio, and still have this risky play, just in case in the future that you may need to sell it, or you need to leverage it into something else. Boom, guess what? You didn't invest all your money into FANGU, and guess what? If the market goes down and a drop, you end up losing all this money. So all in all, FANGU would be a great uh, satellite type of stock or ETF for your main portfolio. So take a look into FANGU. It has all of the Nasdaq tech stocks in it. It has Snowflake. It has Microsoft, Apple, Tesla. I love Tesla. And if you like stocks like that, then take a look into FANGU. All right, guys, enjoy that.